Good morning, ladies and gentlemen. You're with Alex, Senior Account Executive at GDMFX. Today's highlight: Greece votes no on referendum. We'll start with the North American markets. We had the Independence Day on Friday, so mainly fireworks. The Dow went 25 points down gap, and the Nasdaq had a 51 point gap down today. The Dixie is up to 96.27 from 96.06. And today we'll be expecting quite a few Tier 2 news: Markit Services PMI, Markit PMI Composite, ISM Non-Manufacturing PMI, Labor Market Conditions Index, Ivey Purchasing Managers Index from Canada, and Bank of Canada Business Outlook Survey. Onto the EU markets, the Market Services PMI in Italy and the European Union came out a little bit better than expected, and Germany and Spain slightly worse. EU retail sales year-on-year came out 0.1% better than expected, and German factory orders 3.4% higher than previous. Greeks overwhelmingly voted against their international creditors' conditions for further bailout aid, and as a result that could deepen the rift between Greece and the rest of Europe and push the country closer to bankruptcy and an exit from the euro. More than 61% of Greeks voted no in Sunday's referendum on austerity measures. Greek Finance Minister Yanis Varoufakis also said that he was quitting his post earlier today. The biggest mover Friday was the Euro-Australian dollar, 250 points up. Tomorrow there will be a European Leaders Summit, special summit, to talk about the situation. Alright, on to the UK markets. The sterling lost some of its value compared to the US dollar, 6 points down on Friday, as there was not much movement due to the 4th of July and the expected Greek referendum. The situation remains unclear, as many don't know exactly what to expect after the referendum results, and investors seem to consider the sterling a safe haven as 10-year yields price drop. The FTSE 100 had a 26 points movement downward yesterday and closed at 65.44. The 10-year gilt yields were at 1.997% yesterday. Today we'll be anticipating the GDP estimate. Alright, on to the Asian markets. The Australian dollar has dropped to a 6-year low on signs of sluggish consumer spending on Friday, further supplementing the iron ore prices slide. Data showed retail sales rose 0.3% in May from the previous month, which is considerably weaker than the expectations. Australia's dollar is declining as iron ore, the country's biggest export, tumbled amid a rise in supply of the ore and concern that demand will shrink as China's economy slows. Lower exchange rate and a cut of the cash rate are to be sought in order to boost the economy. In Japan, the leading economic index for May was slightly less than previous, now at 106.2, and the coincident index for May 1.8 points less than previous. The Aussie versus the New Zealand dollar and JPY were the biggest movers. Both went down 170 pips. Alright, on to commodities. The deal with Iran is on track to work out, and Russia is seen as the biggest oil market loser when Iran does eventually come back to the market. Gold had a range of $5, trading at 1166.65 now. Silver had a range of 30 cents at 15.57 now. Crude had $1.30 range at 54.77 now, and natural gas is trading at 2.72 at the moment with the range of 10 cents. Alright, thank you everybody. This was today's European Session Outlook, and I'll see you next time. Goodbye.